You want to know how the US economy is really doing? Sometimes you don't need to look at the stock market. You just need to look at our highways. You see, the trucking industry is a fantastic economic bellwether. And right now, one of its biggest players, J.B. Hunt, is sending some signals you're definitely going to want to pay attention to. So you might be wondering, how can a performance of just one company, even a huge one, give us a real window into the future of the entire supply chain? Well, it turns out their latest financial report is a masterclass in how to navigate a very, very tricky economic landscape. J.B. Hunt's CEO, Shelley Simpson, nailed the current mode with a single word: fragile. That one word just sums up the tension of this moment perfectly. See, the market isn't necessarily weak, but it's brittle, it's sensitive, it feels like it's poised right on a knife's edge. So what does that actually mean for all of us? So, what does a fragile market really mean? Okay, think of it like this. Imagine a rubber band stretched almost to its breaking point. There's very little slack, or elasticity as they call it, left in the system. Trucks and drivers have been leaving the market, so even a tiny bump in demand could send some pretty big ripples through the system, and fast. This is the tightrope J.B. Hunt has to walk every single day. So in this kind of fragile environment, how did J.B. Hunt actually do? Let's take a look at their scorecard for the fourth quarter of 2025, because honestly, the numbers tell a really surprising story about choosing efficiency over just raw growth. First up, total revenue. It was down 2% compared to the year before. Now, normally, a drop in revenue would set off some serious alarm bells, right? It suggests less business is coming in the door. But that's not the whole story here, not even close. Because here's the twist. While that top-line revenue dipped just a little, their operating income, that's the profit from their actual core business, jumped a massive 19%. Think about that. They made significantly more money on slightly less sales. How on earth is that possible? And the bottom line for investors? Well, earnings per share was up a whopping 24%. This isn't a story about a booming market. It's the story of a company getting incredibly disciplined and efficient, really as a direct response to a tough one. And you can see this pattern of efficiency playing out across their entire business. Let's look at their biggest segment, Intermodal. That's moving containers by both rail and truck. Revenue was down 3%, but income shot up 16%. Same pattern. Their dedicated contract business was also really strong. But you can also see the pressure points. Their final mile service, which delivers big things like furniture and appliances, saw a pretty big drop. And that tells you a lot about softer consumer demand for those big ticket items. Look, this level of performance does not happen by accident. J.B. Hunt executed a very deliberate strategy. Let's break down their efficiency playbook and see how they pulled it off. The absolute cornerstone of their year was a relentless focus on what they call operational excellence. Now, I know that can sound like just another corporate buzzword, but this translates into very real-world results, like them having a record year for safety. They even celebrated one of their drivers for reaching an incredible 5 million safe miles. I mean, wow, that's the kind of discipline we're talking about. And looking ahead to 2026, their CEO laid out these 3 crystal clear priorities. First, disciplined growth. Notice that word, discipline. They're playing offense, as they put it, not just waiting around for the market to save them. Second, they're going to leverage their huge investments in people and technology. And third, they're going to keep repairing their profit margins. It is all about profitability. And you can see the result of this focus right here. Their big initiative to lower the cost to serve is gaining some serious momentum. They saved over $20 million in the third quarter, and then they ramped that up to over $25 million in the fourth. That puts them on a pace to save over $100 million a year. That's how you boost profits when sales are basically flat. But of course, it's not all smooth sailing. The road ahead has both potential roadblocks and some really clear opportunities. Let's take a look at the headwinds and the tailwinds that they're facing right now. So on the risk side of the ledger, there's some potential disruption from mergers in the rail industry, that softer demand for big item deliveries we mentioned, and of course just general economic uncertainty. But the opportunities are really powerful. That tight truck capacity we talked about? Well, it gives reliable carriers like J.B. Hunt more pricing power. Customers are also choosing to work with fewer, better partners, and J.B. Hunt is winning that business. And crucially, their customers' inventories are super lean, which means any spike in demand is going to require urgent shipping. Okay, so we've gone deep on one company. But what does this story of fragility and efficiency mean for the broader economy and, well, for you? Let's connect the dots. So what's the bottom line here? It means our entire supply chain has less of a safety net than it used to. Inventories are thin, and there just aren't as many spare trucks on the road.
That fragile state means the next time there's a holiday shopping rush or a hot new product drops, a small spike in demand could quickly lead to shipping delays or higher costs. Costs that, you guessed it, eventually find their way to you.
And that leaves us with this final thought. In a really uncertain and fragile economy, J.B. Hunt has shown that a relentless focus on discipline can deliver some seriously impressive results. So the big question for 2026 is whether this model, thriving through discipline, not just growth, is about to become the new blueprint for success across the entire economy.